I'm joined today by three fabulous experts, and I'll be introducing you to them shortly. Helen Chorley, Matt Siddell, and Mike Frisby. Let's just get straight down to it. The COVID-19, of course, is a little bit unexpected. After we had the election uncertainty last year, didn't we? And Boris won and all of that. And there was a massive bounce. We were all kind of very optimistic and things were booming. And then all of a sudden, COVID-19 hit, there was shutdown. It's the biggest jolt to the economy that any of us will have ever seen in our lifetime. Some economists are talking about a 25% drop in GDP. It's just come off a cliff edge as we've gone into shutdown. To put that into perspective, even in the Great Depression in the 30s, it was only 8 or 9%. And the 2009 thing was about 4%. I think one of the big differences this time round has been the way the government has tried to shore things up, whereas particularly in the 1930s, they didn't even know what to do. But what am I saying? I'm saying there is change. And there's massive change. And when we're all freed, because 4th of July, Boris is saying is Freedom Day, Independence Day, or whatever, we're all going to get out of lockdown and go drink down the pub and all that, and get our haircuts. So we'll be able to do all of that from 4th of July. But the property market that we'll be heading into is going to be a changed one. So in January, you may have done a little bit of goal setting. You may have been thinking about your goals for 2020 and the years beyond. Those are likely to have to be reassessed. So what I want to kind of throw out to you guys, the panel really, is what are realistic goals for 2020 and the next couple of years in the market that we're going to enter into? And how do you think they've changed since when you were making your plans after your turkey on Christmas Day? Who wants to start us off?
Well, my world's completely changed with this, because I spent lockdown kind of here in the UK, as I said, and I was living my nice little kind of semi-retired life in Malta, doing my investing, working with the people that I want to do, ticking along nicely. And it's really changed for me in terms of, I kept getting people coming to me who are having problems with either developers or mentors or people that were having money challenges, getting their own money back. So kind of I've taken a kind of well, I'm doing both now. I'm kind of helping those people out and I'm doing my investing as well. So that's why I am kind of a lot more out there at the moment and speaking, and I'm even building a website and these things that you seem to have to do these days.
That's an interesting point that you mentioned, because when the market kind of stops its rapid rise, particularly people who are over-geared and over-leveraged starts to find that the music stops and they don't have enough chairs. And you're seeing that being a fund of developers.
Oh, totally. And I don't think it's any coincidence that everybody's popping up kind of trying to sell more courses. There are some great kind of traders. There are some great courses. And you guys run some great stuff. So it's not to diss everybody. I think there are going to be lots of opportunities this year. I really do. When we come to the over 100 grand, what we can do with that. When we get to that question, I'm all over that, because that's me. I'm sat here kind of waiting to deploy this. But I'm kind of always long cash, because I like that security of having kind of that money in the bank. So that'll be.
So you're kind of saying that obviously there's opportunity, but it's still a little bit of a wait and see from your point of view before deploying those funds.
Oh, absolutely. I think there are deals to be had right now, but do I think there will be even better opportunities? I was watching one of your videos on the channel the other day where you're saying, if you spend all your cash now getting in, because this looks like a great deal, this looks like a great deal, what happens when you get, 3, 6, 9 months down the road and the deals are even better?
Yes.
And you've parked all your cash? I
Yes.
think if you can, I think it just pays to be, I widely admit I'm a tortoise rather than a hare. But that served me well, each to their own, but there are deals, but be selective. Don't kind of jump into things.
By the way, the reason I said that in that video is because I did that in the early 1990s. I bought stuff which was cheaper 6 months down the road.
Yeah.
And very few people have lived through that sort of investing environment,
Exactly.
and then you kind of know.
Listen to the people that have seen this. I've seen it frequently, on kind of, well, definitely on foreign exchange, but on kind of the stocks and alternative kind of assets other than property. So I kind of speak at it from that perspective, but property is the same. So listen to the people that have been around long enough to see
Yes.
those market movements and what happens.
Mike, what are your views? How do you think you should reassess your goals and strategies going forward?
Yeah, I think I'm with Helen on this one in terms of, I think there's going to be huge opportunities. Number one is I think there is going to be huge opportunities, and I think it's going to be some of the best buying opportunities, we're going to see in our lifetime. I just know in the last recession, I wish I bought more property. So I do think, looking back with hindsight and having gone through something like this before, you can all learn from it. But I don't think there's a rush. I think this has got still some space to pan out. We haven't seen a lot of the unemployment come through. When if furlough stops, what's going to happen to everybody? Are they going to go back to work or not? I don't think everyone will be. So I think things might get a little bit worse in the economy than better. So, but we're going to see a curve, aren't we? We're going to see a bit of a curve. Although where I am at the moment, the property market is very buoyant. So if you're looking for something now, make sure it's a very, very good deal. Don't take an average deal. It's only worth jumping in if it's a very, very good deal.
So how would you define that? For you, what is a, because I come from the viewpoint that if a good deal presents itself, there are certain deals I would do today.
Absolutely. And I'm the same. I'm the same with that. You want to look at what price, you don't have lots of data points for where we are now. And that's the thing, property data points always lag behind a bit. Obviously, there weren't many transactions in the lockdown. So you've got to look at the data points before and then sort of discount that and then get your discount below that. I think some people are just discounting it and thinking, right, that's a good deal. You need to do a double discount, take some money off and then take some further money off. So we're talking, much bigger percentages than most people are normally talking about. If I find a good cash flowing deal that, is 30% below market value, then I would be interested, below the actual value. Certainly, the question though is what is the value today? It is a good question.
It's certainly not the asking price, because a lot of people, base it just based on the asking price, 10% below asking price, and they've got a, below market value deal. But it's not.
Yeah. And asking prices haven't suddenly come down from the estate agents have left them where they are to see what's going on in the market. So again, you've got to look at who's motivated. Is this a good deal? Why are they selling? If it's just a general sale, are you really going to be getting a good deal until people are a bit more desperate? You just have to wait and see.
So I get from you that obviously, we're heading into a little bit of a dip here, but there's uncertainty around employment, which I fully agree with. And until that really shows which direction it's going in, it's a bit difficult to plan. But you still know what's an extra special deal that is worthy of doing. And reading between the lines of what you're saying, it's really down to seller motivation, I guess. There are plenty of sellers now emerging whose circumstances are such they have to sell. And it's the need for a sale that trumps getting maximum price.
I think so. This is what I, when I first started investing, that's what I was looking for. I wasn't looking for particular properties. I was looking for circumstances and really the motivation of the seller, because that's where I could then sniff out deals. And I think it's the same again today. You can go to an estate agent, but unless you know what's going on behind, is there really going to be a deal? And then is it genuinely a deal? Helps if you know that someone is actually a little bit more motivated and needs to sell. And too many times I've seen people trying to push deals on someone who's happy to wait. And you should wait, because suddenly you don't know what happens to their circumstances.
Yes. Matt, where do you stand on all of this? What's realistic to achieve over the next year or so?
So it's very interesting listening to everyone share their thoughts. And I think the difference this time around is that stamp duty rates are much higher. And when I reflect back on the most expensive property I bought like 7 or 8 years ago was a £4 million house in Primrose Hill. And the stamp duty on that was about £230,000, I think, at the time. And we thought that was astronomical. We looked at it and we thought, geez, we could buy another HMO in Reading for the price of that stamp duty bill. But I think now it'd be like 3 times that. Prices are not going to run away. Property prices do not recover and bounce back anywhere near as quickly as they come down. I think there's still a lot of people on furlough, isn't it? Something like 9 or 10 million people or something. Like, it's a big number. And some of these people are anticipating redundancy, at which point they're not going to be able to get mortgages. And some of them are buying properties now whilst they can. So I don't think all of the bad news, I think all of the bad news is anticipated, but it's not all out there yet. But Mike's making some good points about how you buy and you buy well. So my rule of thumb is you need the right property and the right vendor and the right circumstances. And unless you've got all 3 of those, you're not going to have a deal that's really a deal. So the right property is something you can improve, extend, change the use, preferably subdivide as well, or do all of the above. The right vendor is someone who wants the money more than they want the property, and they will take the money from you rather than just hold out. And the right circumstances is anything that just gets rid of a lot of the demand. So you're either first in the door before the agents put it on Rightmove or Zoopla, or it's been sitting there languishing. But I had at one point I had a team of 5 people sourcing deals for me in an office that was a room like this and another room like that. And I told them on the whiteboard, right vendor, right property, right circumstances. Otherwise, it's not a deal.
That's it. No, that's absolutely correct. And I think you raised some other interesting things in there. I mean, the government have told us that there's going to be a budget, and that budget in October is going to be about recovery. And there's going to be several things in there. One of the big things that is going to be in there is planning reform. They're talking about moving to a zone system, which I think is very, very sensible to allow certain development within a zone. And there's going to be more PD for both residential and commercial. So, and I think that's fantastic news. I mean, if you're doing residential property, when I started buying residential property, I'd always buy an end terrace instead of a mid terrace, because obviously there's stuff you can do with the end terrace if you've got the space. And when you are a developer or an investor, you want to add value. In a static market, you've got to make that increase in value happen yourself. And there's got to be the potential to add value. But what the government, I think, will give us is the right to be able to realize that potential with the minimum of hassle. And isn't that going to be wonderful? Anyone enthusiastic about planning reform? Or do you think it's just that we've heard it all before and it's all more talk?
I think it sounds great in theory, but it's a question of how well the theory translates to the practical, isn't it? Normally you've got to go for prior approval, which means there's criteria that's got to be fulfilled. But no, anything in theory helps that. But instead what we've seen is the government do things with like Help to Buy, which is just a massive subsidy to house builders.
Yeah.
Someone was asking me about this last week, and I've never paid much attention to it because I'm quite happy living in this house here. But you don't need very much money to take use of Help to Buy. And if some of the house builders are a bit distressed in 6 months' time, there could be some really good deals to pick up there, and not much risk either.
Yeah, and I totally agree with that. I think the Help to Buy has been propping up the housing market while it's been quiet for the developers. And, the government needs to continue that to help prop them up. Otherwise, there will be some problems down the line. And I think developers might not see, the developers being in trouble will be a little bit further down the line, but they are coming off the back of a couple of slow years anyway. So, we're kind of seeing they're probably at the last tether anyway. So I think that, talking to developers will certainly be an opportunity. And certainly I've got some plans to be doing that on a big scale.
Help to Sell is a disaster waiting to happen, in my view. It's going to have, because often these properties are premium priced, and when the market turns, they're the first to head into negative equity because there's just nothing there. They're just so toppy to start with. And then you've got a whole bunch of usually people on the first rung of the housing ladder stuck in negative equity. They can't move when when family circumstances change and they need to move on and they're just stuck. And the thing about that is, I find, is that those stories drive the headlines, but the investors who look behind the headlines will probably not be looking at those sort of properties. We'll be looking at other second-hand stock in good solid areas with potential to improve, and that will be where the value will be.
I just think, again, I mean, you know, obviously the world has gone upside down, a bit topsy-turvy for a while, hasn't it? So, but don't lose sight of your overall goals. You know, you need to keep sight of what you're trying to achieve and just work with the new environment and adapt. You know, it doesn't necessarily, you know, if there's opportunities, take them, but also it's okay to push things back a little bit and be patient. But I would say don't necessarily lose sight of them. You talked about, you know, people's 5 years goals. We shouldn't be changing those too much, and certainly not on a regular basis. And we're always going to have ups and downs. And when there's uncertainty, that's when there's opportunity. So, you know, I believe we are in a part of opportunity. So just adapt and be safe. You know, just be really, really careful in a time like this.